there's a lot of people out here that actually don't know what prop accounts are. So maybe why don't we jump into real quick before you go into
like
that
the specifics of what
because a lot of people think it's fake money, it's not real, and there's those that don't even know what a prop account is.
So basically what a prop account is, they act as your broker and your backer. So a prop account operates like a broker. It lets you trade fully on their capital, so sort of like 100% margin, right? And for that privilege, they take a cut off the top. So it may be 10%, 20%, 30% of your earnings they're going to take in exchange for allowing you to trade solely with their money. But obviously everybody wants to do that, but they can't just let any average Joe off the street trade their money and just lose all of it, right? They're out of business. So you have to have a way of actually qualifying who's competent and who isn't. So it's called a sim test or an evaluation or an eval, where you basically pay them real money to trade fake money to prove competency. So maybe like, let's say for example, with a typical 50K prop account, you got to make 2,000-3,000 without losing, 2,000-3,000 range within X amount of time, and you pass the test. So do that and you're in. But now that you got your foot in the door, you're able to place trades with their money. If you draw down too much, typically usually 3 to 5%, they'll pull the plug. You're out. Game over. Start all over again at the eval phase. Right? So most people, and not on top of that, they have to also make money within the prop firm's rule set. Like for example, some make you trade every single day, some make you have more losing days or more winning days than losing days, obviously. And certain ratios can only come from certain sessions. So there's a lot of other rules stacked on top of just making money, which makes prop harder than trading your own cash.